Wednesday, January 30th. Welcome to Market Foolery. I'm Chris Hill. Joining me in studio today from Motley Fool Pro, Bryan Hinmon, and from Motley Fool Asset Management, Tim Hanson. Happy Wednesday, guys.
Hey, Chris.
We got a lot on our plate. We're going to talk Amazon, we're going to talk Boeing, Chesapeake Energy, but we're going to start with the big story of the day, the big event of the day, that is Research in Motion, which has finally, mercifully unveiled the new BlackBerry 10. It is actually called the BlackBerry Z10. And I'm just going to quote Bryan from CNN, the lead sentence in their story. The BlackBerry Z10 is the kind of phone Research in Motion should have made years ago. I know that, obviously the phone is just out, so you haven't had a chance to, kick the tires on it. But right before we walked in the studio, stock was down about 5%. And it had been up when the market opened, but basically once the event started, stock dropped.
That doesn't sound good, Chris.
That doesn't sound good at all. What are we to make of this?
Well, there's a lot going on at Research in Motion, and they're very quickly coming to, if they haven't already passed it, an inflection point where they really needed to define what it was they were going to do well. And so this is very much a call to action for them. They're sort of placing a lot of importance on this, and it seems like the way that their business model is developing, they're really doubling down on hardware sales right now. So if this phone does not pan out well, and there's going to be two versions. One version is just a touchscreen, and they're going to come out with a keyboarded version, also with a touchscreen. I think a month later, so it's going to appeal to the BlackBerry diehards. But if this phone doesn't pan out well, and they are making this announcement that they're basically doubling down on hardware sales as opposed to service sales, which is the current cash cow of the company, they could be in some serious trouble.
Tim, they are doubling down on the BlackBerry so much so that as part of this event, they also announced that they are changing the name of the company from Research in Motion to BlackBerry. The ticker symbol is changing from RIM to BBRY.
I'd say create value, Chris.
I was just going to say.
That's where, if you're going to have a meeting, create some value, that's where you do it. That's how you do it.
Fresh start.
Totally
fresh.
We're BlackBerry now.
Yeah, exactly. You're skeptical.
Because, at the end of the day, this is all about the ecosystem, and Apple has an ecosystem, Android has an ecosystem, BlackBerry doesn't, and they're a few large corporate customers away from being in real distress. And it used to be that if you were given a company-issued phone, the company picked what model you got, and they supported it. And more companies now are letting people bring whatever phone they want to the table, and they'll support it and give it access into the company infrastructure. And that's a result of a variety of things: improved technology, improved security, and whatnot. But that core, it's hard to argue that consumers ever wanted BlackBerry. Companies wanted BlackBerry for security purposes,
right.
And that's no longer the case. They don't have an ecosystem, and frankly, even if they can compete on features, and the Samsung Galaxy phones and the HTC Fires and the iPhone and presumably this new BlackBerry can all compete on features, the fact is that a lot of high-end users will still want the iPhone because of the ecosystem opportunities that you get. You get to sync it with all your other devices. And I just don't see how BlackBerry can make meaningful inroads into that consumer market.
Bryan, global market share for BlackBerry 2 years ago was 20%. Today it's 5%. What do they need out of this phone so that 6 months from now they can stand in front of Wall Street analysts and say, see, this is working?
Well, they need to get all current or almost all current BlackBerry subscribers to buy into this phone. They can't afford to lose any more.
They've got about 80 million. That's about 80 million people you're talking about. They need roughly 80 million, of them to say, I'm going to upgrade.
It'll happen. It'll happen over a course of a few years, but they need to sell 20, 30, 40 million of these per year because as Tim was saying, companies. It's hard to argue that consumers like these phones or wanted these phones. It's been companies that have wanted them. So BlackBerry has distinguished itself via security, but that differentiation gap has really narrowed, and companies themselves now are less willing to support the BlackBerry phone because users are switching away from it, and so it's really not worth the investment in their tech time to be able to support it at such low levels.
The stock has doubled from where it was 3 months ago.
Yeah, but What has it done from where it was 12 months ago?
So, I mean, to that point, is this the sort of thing where you find this at all attractive today, even as sort of like, hey, I'm going to take a flyer on this stock, or is this many things working?
It's looked so cheap for so long based on trailing results, but at the end of the day, it's just too hard because you don't know what the adoption curves. I mean, everybody knew a new device was going to have to come out, but you can't predict the adoption curve. And obviously, Apple's profitability is going down. Research in Motion's profitability is going to be punished, and frankly, growing a new business, which is essentially what this phone is going to try to do, because it's going to try to appeal to more consumers, which is something BlackBerry doesn't have a lot of experience marketing to or selling to. It's a new unknown business. At least Apple's business is something they can defend from. So they've got cash, they've got a product now. Those are both good things. But
they've got a Super Bowl ad. Apparently, they're going to roll out on Sunday.
Probably $10 million that just lit on fire. But it's just too hard. I mean, somebody may make money on BlackBerry. It's not going to be me.
Yeah, and like I said earlier, their business model is changing. The dominant source of the cash comes from this services business, which is changing. So that dominant source of cash is not going to be the same a year from now as it has been in the past 5 years. So yes, this phone is going to be a great upgrade for current BlackBerry users, but if they are saying we're going to make our money now from hardware, they need to get converts, and we have little reason to believe that they're going to be able to get converts.
Shares of Amazon hit an all-time high, a new all-time high this morning in the wake of fourth quarter earnings. Tim, help me out here. They missed on earnings. They missed pretty significantly on earnings. They lowered guidance. I sort of feel like any other company who did that would get punished, and yet the stock this morning is up, and it's at a new all-time high.
Yeah, Amazon stock seems completely uncorrelated from its business, which is fascinating for a lot of reasons, and I think it's just because the Amazon shareholder base is sort of, I think that's turning into one of these sort of feverish, we believe type shareholder bases, and so they missed on all these things, but they improved on operating margin profitability, which was still a really small number, but it was better.
Right, and their cost of shipping went down slightly.
And everybody latched onto that as a reason to get really excited. But I just don't. Amazon is just something I don't understand. Obviously, they are they're omnipresent in retail sales. It's a fabulously successful website to the extent that it's visited and transacted in by many people.
Yep.
They have a great little business afloat where these third-party vendors sell through them, and they get to keep the money for a period of time before dispersing it, which is nice. Mm-hmm. But everybody believes that Amazon is going to become some ubiquitous, awesome, profitable company. But profitability has been going down every year, since the mid 2000s, essentially, roughly. And I don't know where it's going other than just being enormous and barely profitable.
How much of this do you think has to do with Jeff Bezos, the CEO? Because it seems like he is moving up the ranks. I think he was for years now. I think he's been a respected CEO. It seems like he's moving up the ranks in terms of investors and certainly Wall Street analysts' willingness to cut him a lot of slack.
I think it has an enormous amount to do with Jeff Bezos. I mean, one of the things that I have sat back and marveled at that he's been able to do is manage expectations better than any other CEO that I know of. He has basically now for a decade plus said, gotten people to buy into the fact that he is going to view this company on a very, very, very long-term basis, mm-hmm. and that near-term cash flows don't matter. We are building something bigger and greater. And for whatever reason, the investing community has said, okay, we're okay with that. We will not care that you don't make a lot of money or don't make any money in any of these years, as long as you give us a glimpse every once in a while that what you're going to do, what you say you're going to do. And it's fascinating what Tim said about how the shareholder base being sort of believers more so than being business-focused investors. To see that unwind, right? We can just look at Apple, right? Apple had this believership that, combined with a rapidly expanding business, shot its share price up dramatically. But all of a sudden, like that believer base seems to have reversed course, and it doesn't matter that the company, released its greatest quarter ever. It's just sort of deflated.
Do you think that there is an external threat, a meaningful external threat to Amazon's business, or is the greatest threat that they face simply their own ability to execute?
No, the greatest threat they face is that people stop giving them free money. I mean, their cost of capital is essentially zero based on, what a high-priced stock they have. And, that's a huge weapon for them to use against competitors. Even Walmart even has to borrow at 3 or 4%. Mm-hmm. And that's why they have such power to undercut everyone on pricing, why they can be sort of agnostic about profitability, because it doesn't matter, because, you need profits to fund growth to the extent that you can't get money from other people. But shareholders have been basically willing to throw money at Amazon. I don't know why, because there's no, you invest with a timeline to get your money back with a return. And I don't see what return Amazon is generating for shareholders. And in a race to the bottom on pricing, you win market share, which Amazon has been hugely successful at.
Right.
And from a consumer perspective, it's probably the greatest company in the world based on what they've done for pricing and convenience. But having said that, when do shareholders get their money back? Because when you become a low-cost provider, raising prices is really hard.
Yeah.
And Walmart, did really bad things to its U.S. business when it tried to raise prices, and they went back to everyday low pricing. And I don't know. I don't see when Amazon starts putting in place sales taxes, and to the extent shareholders at some point start demanding profitability and a return on investment, and they can't raise money open-endedly. That's the threat to them, because where do they get capital to fund this, all this growth?
Do you think eventually they, from a stock performance standpoint, eventually they get into the mode that almost like a Costco is right now, where Costco has the membership model and they have sort of this steady business that has paid dividends for investors, but it's certainly not an exciting growth stock. Obviously, Costco, a much older company, but when you look at the Amazon Prime membership model, it seems like that could be the way forward to maybe not spectacular profitability, but steady profitability.
That'll depend on a lot of factors. I think they'd have to see a lot. Like Costco succeeds because they have a very limited number of SKUs in their stores, right?
Right.
And Amazon will sell you anything.
Right.
That's expensive to sell you anything, and they've obviously managed that cost some way by distributing it across third-party vendors, so they don't need to stock all that inventory. But they seem to be going in the opposite direction, which is we want more fulfillment warehouses, we want more physical kiosks, and those things seem more expensive rather than less expensive. But yes, if they can if people become really loyal to Amazon, love the convenience, love the cost, and they can jack up the Amazon Prime membership price to a point where it's very economical, that would be an avenue towards profitability.
Yeah, I think that part of it is critical, because in retail there are no switching costs, right? I often hear people say the reviews on Amazon, are great, and they, yes, that attracts customers, but there's nothing that stops anyone from reading a review on Amazon and then going and making a purchase elsewhere. So the Prime model, the Costco model, does raise switching costs in retail. And like Tim was saying, very interestingly, from a shopping psychological standpoint, is that they can raise the cost of that membership and not raise prices, and probably have a different effect, have the same net effect,
right,
but a different psychological effect on shoppers.
Boeing's fourth quarter profit came in higher than expected, but part of what's getting the headlines today is the fact that the New York Times is reporting that All Nippon Airways replaced 10 batteries before the recent fires and reported the issues to Boeing. They were not reported to safety regulators because no flights had been canceled. Boeing says, hey, look, the batteries weren't replaced due to safety concerns, so this is not that big a deal. I don't know. The stock is up slightly today in the wake of the earnings. This seems like one of those drip, drip, drip stories where the headline risk, I get that the Dreamliner 787 doesn't mean a whole lot to the bottom line right now for Boeing, but it seems like the headline risk is getting methodically worse for them.
Yeah, the company came out today and they said we still plan on delivering, these 60 this year. and slightly accelerating from there. All of the airlines, to my knowledge, have come out in support of the 787 and said, look, we think this is still a great product. We will figure this out. But you're right. Like, this just keeps dripping and dripping and dripping. And it's not I don't think we're anywhere close to the point where airline passengers will start getting concerned about this. I don't really think anyone knows. And so they're not going to not fly on a 787 because of these fears. But, if there comes a point in time where the airlines fear that entering into this relationship is going to help, hurt their bottom lines, they're going to bail, and this could be a bad thing for Boeing.
Tim, if you're Airbus, aren't you just on the phone to every airline you have a relationship with and just trying to convince them to break their contract? Because the Dreamliners, as Bryan mentioned, going to deliver another 60 or so this year. They have back orders for an additional, I think, 750 or so. I don't know. What do you think?
Well, it's an interesting question because so many of these airlines are betting on the fuel efficiency, that the Dreamliner gives you. And
not if it's on the ground.
Not if it's on the ground, but
and on fire.
There aren't a lot of alternatives, right? So I think they're willing to give Boeing the benefit of the doubt for the time being, because it doesn't seem like there's yet been that real high profile problem.
Yeah.
There's obviously been a lot of small problems, but it doesn't seem there's no nail in the coffin yet of the Dreamliner. And so much of this hinges on the science of the battery, which is sort of out of my purview,
right,
to figure out how big lithium-ion cells should be and what should be separating them from one another to prevent runaway, energy. I don't even know the right terminology. I'm so far out of my league at that point. And different experts have weighed in. Elon Musk, very high profile, said it's a flawed design. They have a very different design in their lithium-ion batteries at Tesla and SpaceX. On the flip side, I've read, there are plenty of scientists who've worked in this technology for a long time that basically say this is a known risk, and there are ways to mitigate it through both, protection and various, monitoring of the way the battery is charged and recharged. I don't know what the answer is. More interesting than Boeing at this point from an investing perspective, which I think Boeing has catastrophic downside with capped upside from the current price,
right,
which is not something investors should get that fired up about, is the Japanese company that actually makes the batteries, which is called GS Yuasa. And they trade in Japan, but they've been absolutely hammered on this. And they don't make any money on lithium-ion batteries for airline carriers. It's all, industrial, more conventional batteries for industrial applications. And so, they've been hit by the headline risk, and the stock has gotten quite cheap. And that's a more interesting investing angle here. Although you'd have to look into, and I haven't at this point, you'd have to look at if there were a catastrophic problem, who is liable, who didn't check, and Boeing, knowing that there were problems and not publicizing them, lawyers probably that perked their ears up a little bit.
Yeah, once again, if anyone's going to make money, it's the lawyers.
Because, the one thing that doesn't matter in airline travel is safety, right?
Right. We can skip on that.
That's, number one, size of my seat.
Yeah.
Number two, quality of the meal. Do I get free Wi-Fi? Safety.
Shares of Chesapeake Energy are up more than 6% this morning on very heavy trading volume, and it is not because of an earnings report. It is because of the news, and I was quite saddened to learn this. CEO Aubrey McClendon announced he is stepping down as of April 1st. I was for all the fun we've had in this room at the expense of Aubrey McClendon, I was like, we're not going to have Aubrey to kick around anymore.
Should we have a moment of radio silence?
Maybe. I don't know. It seems like, and this was part of the story
I'm going to go home and hug my antique map collection.
Yeah, exactly. So many wonderful memories that Aubrey's given us. The antique map collection, the fact that he was getting personal loans while he was using Chesapeake. He was getting personal loans and using as collateral wells that were owned by the company. But at the end of the day, I realize he has a financial interest in the stock going up. But from an ego standpoint, that's just got to be a kick in the groin to see the stock shoot up based on the fact that you're leaving town.
The market has identified his value, yes.
Do they have, is it all upside from here?
I think it's a little punitive. Look, he had his, shall we say,
foibles.
Having said that, he has run that company since 1989 and turned it into a major exploration and production company in the United States. He's, revitalized to some extent Oklahoma City by himself. and brought a basketball franchise in there, put in all sorts of real estate development, a huge corporate campus, and some of this is
I
obviously
think
large
T. Boone
jets.
Pickens might have something to say about that, right?
He's done his part. I mean, he's created he has created value over time, and I think he probably got a little too aggressive with how much he thought he deserved.
Yeah.
And his ego some years back started getting in the way of good decision making, and I think it's probably prudent for him to take a leave from Chesapeake. I could never understand Chesapeake, partly because they obfuscate the facts about their business so much so, probably because it bought him time to take money out of the company. But I don't know if Chesapeake offers the same sort of growth opportunity without someone that aggressive at the top.
Right.
And in an era of declining natural gas prices and rising costs of extraction, if you're not, obviously they could bring in a cost manager there who could probably make cash flows go up, which is what I think the new board and the shareholder base want. To some extent, it becomes a less speculative stock, but then you don't get the same opportunity at upside, but nor do you get the same chance that it goes to zero because Aubrey McClendon over leverages and blows something up.
Yeah, for sure. His ego is reflected in the strategy over the past few years of Chesapeake. Historically they've been very aggressive in acquiring assets and then just sort of figuring out the financing later. A big part of that figuring out the financing later was his ability to cut deals and raise capital and be a proponent of the value of the stock to sell to new shares to shareholders. So without him in the picture, we might see a sort of calmer, gentler Chesapeake, a Chesapeake with a different strategy altogether.
But Chris, though, I think the bright side for you here is that with all this time on his hands, he becomes much more involved in the day-to-day management of Oklahoma City Thunder.
That's just
which could get very exciting from a personnel standpoint.
That could get I think it could be. Some of our listeners weighed in to the news on Twitter. DB Hudge, I hope I'm pronouncing that correctly, wrote, "To the king of Sleagle," and for listeners who may not know, Sleagle is the combination of slimy but legal. "To the king of Sleagle, please leave the good state of Oklahoma, take your maps and $200 and go to Rosneft." Which is like a Russian oil outfit.
Yeah, we're just slightly legal as well.
And from Ed Rusk, who wrote, "Amazing, best news ever. Who will win worst CEO of 2013 now that the defending champ is gone?" Do we have any nominees? I mean, I know it's early in the year, but I was trying to think earlier today of another CEO who would have this effect, where the news that he or she is leaving the company immediately pops the stock.
Well, this happened at Yahoo recently, right? Before Marissa Mayer came in.
Yep, it did.
Probably dude from Herbalife would if he left.
The ongoing drama at Herbalife.
More than you would probably think, I mean, let's see.
Yeah, I mean, the Herbalife guy, he came out.
Meg Whitman, maybe even?
Oh, man.
She left HP.
It's been a short but not very impressive run for Meg Whitman at Hewlett-Packard.
Short and not impressive.
Yeah. Bryan Hinmon, Tim Hanson, guys, thanks for being here.
Thanks, Chris.
Sure thing.
If you're looking to read more from Tim and the other guys at Motley Fool Asset Management, you can go to foolfunds.com. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. That's it for this edition of Market Foolery. Our producer is Matt Greer. I'm Chris Hill. Thanks for listening. We'll see you tomorrow.